Okay, so tonight we're doing chapter 7. But before we get started, I wanted to just make sure I sent an email out, but I wanted to make sure you are aware that I changed the schedule. I have an event on Thursday night next week, so I will not be able to teach next Thursday. So we will have Thursday off. That's the week of the 7th. So the actual day, I believe, is the 10th. So no lecture on the 10th. On the 17th, the next Thursday, that'll be our last lecture. So that will be on chapters 8 and 10. That'll be the last two chapters that we're going to cover. And then you'll have a Thanksgiving break. And on the 1st, we'll have our exam 4 for chapters 7, 8, and 10. So 7, we're starting tonight, and then we'll have 8 and 10 on the 17th, and that'll give you 2 weeks to work through homework and prepare for the exam. And then that's it for us. We don't have a final exam, but I'll make sure to put the study guide up like I always do. And also, I'll go ahead and give you the information you need to know, because we will have 10 questions on things that we've covered throughout the semester, but it's only 10 questions. It's not, it's not going to be the exam where the whole thing's cumulative. So we'll go over those and put the study guide up to make sure you understand what you need to know for that. So the revised schedule is up on Moodle. So again, no class next week. So just remember that I put off for that week, and then 2 chapters the next week. So it'll be a little bit longer than normal. Okay, so do y'all have any questions about that? And homework. So we're getting close to the end. If you haven't finished all the homework, you want to make sure that you go into Moodle, Moodle Connect, and make sure you complete all of those assignments and make sure you hit submit. And then if you want to try to increase the score, it should give you unlimited tries. So you should be able to go in there and try to improve the score. I'll take the highest one. So, and you don't get marked off penalty for being late or anything like that on homework. I want you to do the assignments, and that way you can, try to better understand the material. And obviously it helps for the test. But also there's an exam 3 extra credit problem. It is one of the problems that has multiple steps that was covered on the last exam. So that extra credit will actually go towards exam 3. So if you feel like you want to try to get an extra 10 points, you can go ahead and complete that. That is due, I think not next week, but the week after. So you have like 2 weeks to complete that. All right, so now we're going to go ahead and get started with chapter 7. So tonight we're going to be talking about activity-based costing. So it's basically doing the same thing. We're still looking at another method on how a manufacturer or a plant can allocate their cost and try to determine, what product line are they making money, where are they losing money. So activity-based costing is another method that they can use to do that. So that is what we're going to talk about today. And it's a lot. In the example, we're going to be going back and forth. So if I need to slow down or if you have questions, just stop me. But we're going to walk through an example, and then we're going to look at one of the homework problems as well, just to make sure you understand how to do the calculations. So the activity-based costing method, it helps them with obviously their decision making, but it will take so activities that go into producing a product all the way through to the sale. So we have fixed and we have variable costs that we're going to be looking at, and we may have some things that would normally go into a period cost that are going to get costed into the product. So the way we calculate it's going to be a little bit different. Now, if they use this system, it's going to be in addition to another system, like another method that we looked at. So this could just be added for them to help with internal like internal decisions that they're making. It wouldn't be the only system that they're using. So a lot of times it's just a supplement. All right, so when we look at the non-manufacturing as well as the manufacturing costs. So normally when we look at those traditional product costing methods, we're looking at the manufacturing costs going in, but not the non-manufacturing costs. When we do the activity-based costing method, we will bring in some of those non-manufacturing costs because it's going to be associated with an activity. And we'll go through some examples so you can understand what that means. But maybe we look at the orders. How many orders do we have that come in, and we've decided, okay, it's this much amount of money per order for us to process, and we bring that cost in, and that goes with the product. So when we walk through the example, you'll see how all those little activities are broken out and how we cost it in to our product. A little bit different than what we were doing before, but basically the same thing. We're just looking to see how can we allocate those costs, see where, you know, what's more efficient for us in making decisions, you know, for our product lines. So some manufacturers' costs may be excluded from the products. So when we have manufacturing costs, so for the activity-based costing, most but not all can go to activity-based costing. And then for the traditional, we always have all of the manufacturing costs that gets brought in. The non-manufacturing costs, we can come up with some activities that potentially can go into the activity-based costing system. Whereas with the traditional, we have nothing of the non-manufacturing costs. So this just shows you kind of what we walked through the semester. So we have our plant overhead rate. So our level of complexity, we started off with something that was a little easier. Then we moved into departmental rates. And now we're going to be looking at activity-based costing. So basically the level of complexity just progressed and got a little bit harder. So we'll be walking through an example. And like I said, we'll do another one with the homework. So the cost pool has its own unique measure of activity, while the traditional costing system relies on direct labor hours and machine hours, mainly. That's the ones we looked at in this class, to allocate their overhead costs. So I was telling you before, it's going to be unique. Like even if you wanted to have a certain dollar amount that is for processing an order. So it's going to break it out a little bit more. And then we have direct labor and machine hours that work correctly when changes in the quantity of the base are correlated with the changes in overhead costs. And then relying exclusively on that direct labor or machine hours to assign the overhead costs to products has become under increased scrutiny. As an economy-wide basis, direct labor and overhead costs have been moving in the opposite direction, and a variety of products produced by companies has increased. So basically, they're saying that, you know, because of the way we've had changes throughout our manufacturing process, that just allocating costs by direct labor hours and machine hours isn't always accurate. Sometimes they're moving in opposite directions, just meaning that it doesn't really make sense. Sometimes we're costing things that that aren't allocated correctly. We could make, you know, a bad decision based on that. So so anyways, this is an alternative to adding another process method in order to see you know, how the costs work out. And we're going to compare and look at that. So we have an activity. So an activity is an event that causes consumption of overhead resources. And then we have the activity cost pool. So that's the cost bucket in which the cost is related to a single activity. Okay, so an allocation base is an activity-based costing system. And then the term cost driver is also used to refer to an activity measure. So we're just looking to see what's driving that activity and what is the cost associated with it. Then we have two common types of activity measures. We have the transaction driver. So it's a simple count of the number of times an activity occurs. And then we have the duration, which is the amount of time for an activity. Traditional costing systems rely exclusively on allocation bases that are driven by volume of production. The activity-based costing defines 5 levels of activity that largely do not relate to the volume of the unit. So we may have these things, even if we're not producing, but we're selling, we could have some of these costs. So they break it out into 5. So we have the unit level activity, batch level activity, product level activity, organization sustaining activity, and customer level activity. So when we're talking about some of those non-manufacturing, that customer level definitely falls in there. Some of those organizational will fall in there. So it's not just the manufacturing costs. We're going to be looking at everything. Okay. So we have some characteristics of a successful activity-based costing implementation. So we want to have strong management support. Obviously, people are not going to want to roll out a new process if they don't have support or good direction from management at the top. Then we have linked to how people are evaluated or rewarded. So if they are going to be evaluated or rewarded for something, then the message with the activity-based costing won't be as important to them, because maybe there isn't anything rewarded to use in that program. And so they'll just abandon, trying to come up with activities that work for that particular product. And then cross-functional teams should be created. So having that cross-function, that they share information, that can help in the operations. Obviously, when you're designing and you have people that are working with certain products, they may have more information than another team. And so if you cross them, you can come up with better solution, better activities. All right, so we're going to look at Baxter battery. So they have 2 batteries that they sell. Sure Start is a standard battery, and then they have Long Life, which is a deluxe battery. And they are showing right here an income statement. So we see our sales, then we have our cost of goods sold. So we have our direct material, direct labors, manufacturing overhead, gives us our gross margin of 9 million. Then we have our selling and admin expenses. And when we deduct that, we have a loss. So they're wanting to break this out and look to see, where's the loss? Which battery is it? Is there one that maybe we need to abandon and not produce anymore? So they're going to look at the activity-based costing system and come up with some costing pools, and then those activities to measure those. So we have an activity cost pool. We have customer orders, design changes, order size, customer relations, and other. Then we have the activity measure. So the customer order is the number of orders, the number of design changes, how many machine hours does it take for the order size, the number of active customers, and then for other, it's just, that's not applicable. Okay, so we have customer orders. So they're assigned all costs of resources that are consumed by taking and processing customer orders. So it might be several people within the organization that it takes to walk through the whole order, depending on what it is. You have purchasing, you have someone in sales that could be taking the order, then you have people in accounting that are actually doing the billing. So you need to look at that and see what costs are associated with that customer order. Then we have design changes. So we assign all the costs of resources consumed from by the customer, requested design changes. So we have those folks that are in-house that will be able to come up with those design changes. So we want to make sure we try to account for that. And we have the order size. So all of the costs of resources consumed as a consequence of the number of units that are produced. We have customer relations. So all of the costs associated with maintaining relations with the customer. And then we have other. It's just all organization sustaining costs and unused capacity costs. All right. Okay, so we're looking at their numbers again. So we have a production department, we have a general admin department, we have a marketing department, and our total overhead costs. So we're going to break these numbers down a little bit to come up with those activities. So the direct materials, direct labor, the shipping, they are all going to be costed directly to the product because those are easily traced. So remember, we talked about those things are easily to be traced. We can have direct costs on those. So we have direct materials, direct labor, and shipping that we can tie to the product. All right. So once they have let's say they have a meeting and they come up with a chart and they look to see, you know, how they distribute the cost. And you can see that they've broken out by percentages, depending on, you know, what the activity is and which department. And so this is what we're going to use when we do the calculations. So this is the distribution of the resource consumption across the activity pools. All right, so let's look at one of the calculations here. So remember, we're going to look at this first one. So it says production department, indirect factory wages. Let's remember this 30% right here for customer orders so that we can figure that out. So we had the sheet before gave us the cost, right, for the production department. One of them was the indirect factory wages. And on the distribution chart, we saw that it was going to be 30%. So we looked to see what is the total cost of that factory wage, which is $6 million. And then we're going to multiply it by the 30% to come up with $1,800,000. So that's what's going to go in for customer orders. Okay, so let's look at the next one. So then under the production department, we're looking at factory equipment depreciation. So we had a total of $3.5 million, and we determined on our chart. So here's the chart, and it's right here. Factory equipment depreciation for customer orders is 20%. So now we're just going to go through these calculations and fill in the this yellow chart here. So they've shown you a couple of examples of how you calculate it, and then they're just going to give us all of the numbers on this slide here. So this is just taking all of those costs that we were given and breaking it out according to this distribution chart. Okay, so they're just looking to see what the totals were. So if you go back to the administrative wages and salary, which let me get my calculator. So we had $4 million. And then we're going to look to see what was the allocation percentage for administrative wages and salary. So on my distribution chart, it's 30%. So I should have 1.2 million. So right here under customer orders, admin wages and salary, just 1.2 million. So it takes a little bit of time to go through doing the calculations to fill in the chart, but that's all you're doing is just looking at the total. What was that percentage, multiplying it, and then you just fill it in so that everything's broken out. All right. So now they're telling us that the ABC team determines that Baxter Battery will have these total activities for each activity cost pool. So they're telling us we have 10,000 customer orders, 4,000 design changes, 800,000 machine hours, 2,000 customers served. Okay, so we're going to use that information in order to do some calculations. So it says now the team can compute the individual activity rates by dividing the total cost for each activity by the total activity levels. All right, so here we have the computation. So we have customer orders, 4.5 million. So if we go back, see if we can find that number. I don't see it. We had 10,000 orders, but I'm trying to figure out where that the number came from. Here. Okay. So on my customer order, so you see my column right here has all of those activities broken out by the percentages that we just calculated. My total was 4.5 million right here, 452. And I'm going to use that. And then it gave me on this screen, it's showing me I have 10,000 customer orders. So that's where the activity comes from, 10,000 orders. And then it told me how to do the calculation. I'm just dividing. So I'm taking this A divided by B in order to come up with 452 per order. So it's not complicated math. It's just making sure you understand how to get the information and do the right calculations. So some of the information is going to be given to you. Some you'll have to calculate out in order to come up with what that activity rate is. You may have some problems that give you the activity rate. So So each problem could be different. And when we have it on the exam, I'll make sure to give you example problems because it can be a little bit time consuming. So, you know, it's not going to be anything like the homework for sure. All right, so here we have our direct materials. We trace those to our order. We have the direct labor. We have the shipping costs because those we can, you know, trace those directly. Then we have those overhead costs, and that's what we're breaking out. So we broke them out into these cost pools, and then we came up with our activity measures and do the calculations for those. So we have our orders and dollars, our changes, the machine hours, and we have our customers. So let's look at the breakout of each battery. So we have Sure Start. Remember, that was the regular battery. So it doesn't require any design changes. We have 800,000 batteries ordered with 4,000 separate orders. Each Sure Start requires 36 minutes of machine hours, machine time for a total of 480,000 machine hours. And then Long Life is the, I guess the more complicated battery, or I don't know, it's a higher end battery that requires designs. And then we have 400,000 of those batteries ordered with 6,000 separate orders. We have 4,000 custom designs. And then each Long Life requires 48 minutes of machine time for a total of 320,000 hours. All right. So now, since we did the calculation on the, you know, the slide that was a couple of slides back, it said customer orders were 452. That was coming from this one, I think, right here. So we know that our total activity is 10,000 orders. This was my total cost. We divide it. We got 452 per order. So that's where that number is coming from. We have customer orders, activity rate, 452. And then it tells us the activity is 4,000. So for Sure Start, it tells us right here, 4,000 separate orders. I went too far, sorry. Okay, so when we multiply that, we come up with 1.808. Okay, 1,808,000. Design changes, we don't have any. That's why there's no activity. The order size, again, it's given to me, and we calculated out that $6.50. So if we look back, we can see how that was calculated. With order size, we came up with a total cost of $5,200,000. The total was 800,000 machine hours. So that when you divide it, it comes to 650. So we're using that number that we came up with, and we're going to calculate that by those machine hours that it takes for the Sure Start, which was 480,000, and that was given to us. So we just multiply it out to come up with the 3,120,000 and a total of 4,928,000. All right, so let's look at the Long Life battery. So we're using the same numbers, but remember the activity is a little bit different for this battery. So we have the customer orders, $452 is my rate, and the given information says that it's 6,000 separate orders. So I'm multiplying that one by 6,000. Design changes, so it's saying that we have 4,000 custom designs prepared. So we have 4,000 times that $760. And then our order size, we have that $6.50 again. And they tell us that we have 320,000 machine hours. So we multiply that out. So now we're coming up with a cost for the Long Life. So now we have that cost separated by each one according to the activity-based costing system. Okay. So when we look at the numbers and we want to tie it back in on the screen, you know, before on that sheet, it showed us a total of 22 million. So we want to see if that calculates correctly. So we have 4,928,000 plus the 7,832,000. So this is from Sure Start. The second number is from Long Life. And then we have not assigned 9,240,000. So I believe if we go back, it'll tell us. So we have 22 million total, and I believe it's coming from the other because we don't have that one on our activity that we calculated. And I believe it's the customer relations because we didn't break that out on the batteries. So these two numbers, these two bottom numbers, is where the 9,240,000 is coming from. Let me go over here. So that's the costs that were not assigned. So when we add them all together, we get back to that 22 million. Okay, so we know we've accounted for all of our costs. So now we're going to do basically the same thing, but we're going to look at one customer. So we're looking at one of the customers. It says just one of the 2,000 customers that they have. The name is Acme Auto Parts. So they placed an order, a total of 12 orders. And it says 4 orders for long lives required design change. So our orders, we have 8 orders for 60 of the shore starts, and then we have 4 orders for 50 of the long life. And it gives us our machine hours. So we have the 480 shore starts required 288 machine hours. And then we have 200 long lives that require 160 machine hours. Okay, so this is the information that we're going to need when we're doing our calculations. All right, so we're going to go back to those rates that we had before. So we had customer order at 452, and it says activity 12. So we go back and remember it told us we had 12 orders. So that's where the 12 is coming from. So we multiply and we get 5,424. Design changes, they told us that there was I think it said 4 orders right here that had design changes. So we're using the 4 of the for the activity, and then using our activity rate that we came up with to come up with the total cost of $3,040. Order size is 650 per, and then the activity is 448. That's given to us in those hours down here. So we have machine hours for that one. So the 288 machine hours plus the 160 machine hours is the 448. So that's where they're coming up with that number. So we take the 448 times 650 to come up with 2,912. And then customer relations. So there's only one because it's just one customer, because this number is per customer. So it's $1,540. That also goes back to here, our table where we figured all the activity total costs and how many was given to us to do the calculation. That was given to us on this slide here. So if you look at customer relations, total cost $3,080,000. We have a total of 2,000 customers, so it's $1,540 per customer. So that's where that number came from. Okay, so now I have a total of $12,916 that I'm allocating to this particular customer. All right, so for the product margin calculation, so we have sales, we're breaking out our short start and our long life. We have our total column. So it gives us all of our direct material, direct labor, and shipping. Then we're going to add in our cost. And so we got to go back a couple of slides to see where this came from. So when we went back, let's see if I can find it real quick. Was it this one? No, it wasn't this one. I think it's this way. I know we had this right here. All right, so when we break it down, customer orders, see this, we have a total level of 4,000, and we times it by the $452. We got the 1.808. And there it is right here. And then we had the order size, 3,120,000. And then when we look at the order size, we had 480,000 machine hours times 650. So that gave me the 3,120,000. So that's where they're going to get those numbers. Okay, they're going back to that sheet. All right, so they fill in here, fill in long lives. So we have our totals on the ends, and we have so far our sales and some of our cost assignments. So now the third step is to deduct each product's direct and indirect costs from sales. So now we have all our direct material, direct labor, shipping. We had all of our information that was brought in from those calculations that we had before to get our total cost. And we're deducting that from the sales number in order to come up with our product margin. So if we break this, these two products out by their activity-based costing system, you'll see that we have a loss over here in long life with those complex batteries that have designs and stuff, require design changes. So this product here, Sure Start, is where we have a lot of profit. So our product margin here is $8,372,000. So if we break it out this way, you can really see, okay, so, you know, if this is accurate information, we can tell where we're losing the money. All right, then we have the product margins that can be reconciled with the company's net operating income. So we went to the margin, product margin, and when we total them together, we get $7,240,000. And then these are the costs that were not assigned to the products. We had that customer relations total, and we had that other total. So there's that $9,240,000 that we had talked about before. That gets deducted from the product margin, and that's where we come up with the $2 million loss in operating loss. Okay, so now we're just looking at it, breaking it out according to the activity-based costing system. All right, then we have the customer margin calculation. So remember, we did the example with Acme Auto Parts. So we have, we broke out the costs on the previous slide, and we can go back to that if we need to and see what all of that was. But for now, we're looking at our direct costs and we're looking at our sales, and then they're going to add in those costs that were calculated out on that sheet that was a few slides back. Okay, so now that we have all of those costs, we have to deduct them from the sales. So here's my total sales, here's all of my costs. And so now it shows a customer margin of 384. So we just barely breaking even with this customer. So if you have a customer that's buying a lot of those life, what they called life, I think it was life something, long lives. If you have somebody that's buying a lot of these batteries, more than likely that customer is contributing to the loss because they are using those batteries that have all that design time and everything. So if you have a customer that's buying more of the, you know, the regular battery, they're going to have more profit for your organization. All right. So it says the product margins using the traditional costing system. So now we're not going to break it out by activity. We're going to use that traditional costing system. So here are our sales, our direct material and direct labor. And then we're going to have the plant-wide overhead rate. So we have all of our costs for manufacturing overhead. We got a total of 14 million. So remember that how we do that calculation. We look at the total cost and we divide it by the total machine hours in this case. So our total machine hours that was given to us in our example was 800,000. So when we divide that, we get $17.50 per machine hour. All right, so Sure Start, 480,000 hours times that rate to come up with 8,000,004. And then we have long life, we have the machine hours, how much that was, and this is our cost, 5,000,006 to get our total 14 million. Okay, so all they're doing, they're just showing you here that they're just multiplying 480 times 1750 to get your total. All right, so now we have the sheet that shows each battery and then the total. So we have our sales, we have our cost, coming up with our product margin. So for the Sure Start, we have 6.9 million. Long Lives, we have 2.1 million. So notice we don't have a loss on either one, but you can still clearly tell that you're making more money on the Sure Start. And then we have our selling and administrative expenses. Remember, those come out after the product, you know, from they get deducted from the product margin. They come out after, they're not included in that cost. So our selling and admin is 11 million, and that's how we come up with our loss of 2 million. All right, so they're breaking this 11 million down for you. It's got shipping, marketing, and then general admin. All right, so let's look at the differences. So we have our activity-based costing system here. So Sure Start, we have this 1.4 million. We have Long Life with that loss of 3,232,000. So all they're doing is comparing. So they're looking at what the traditional product margin was and comparing it to that activity-based costing system. And that's how they're coming up with those differences. So the traditional costing system, it overcosts Sure Start and reports a lower product. That just basically means that we're putting more cost into this Sure Start battery. Okay, so that's what the overcosting means. It means we're putting more cost in that battery than we probably should be, and that's what's given us a result of a lower product margin. Now on the other battery that requires designs, it's undercosting. So it's looking like we have a little bit higher margin. So when you look at the margin on this sheet here, it looks like we're not really losing any money when we're producing those long life batteries. But if we break it out by the activity-based costing system, it gives us a little bit different picture. And, you know, maybe if we did away with it, we wouldn't have a loss at all. But anyway, just showing you that there's some differences there. And if you're under costing, obviously you're going to have a higher margin. If you're over costing, then it's going to give you a lower margin. All right, so there are 3 reasons why the reported product margins for 2 costing systems differ, you know, from one to the other. So some of those should be obvious, but it says traditional costing allocates all manufacturing overhead to the products. The ABC costing only assigns manufacturing overhead costs consumed by the product to those products. Okay, so you're breaking out those costs different. So that's one of the reasons. And then it says traditional costing allocates all manufacturing costs using a volume related allocation. And activity-based costing, it also uses non-volume related allocation bases. So there's a different way that we're calculating the costs. So again, when we're calculating that different, it's going to, you know, cause us to have some differences between the two. And then the third reason is traditional costing disregards selling and admin expenses because they're assumed to be a period expense. So remember, period expense are just expensed in that period in which they happen. It's not tied into the cost of the product at all. It just comes off after the gross margin. And then we have the activity-based costing that directly traces shipping, which is considered a period cost, but we're going to trace that shipping cost to the product. And then it includes non-manufacturing overhead costs that are caused by products and the activity cost pools that are assigned. So some of those costs that normally would be under the gross margin are now kind of pulled up into the product. So again, that's another difference in why you're going to have those differences in those costing systems, because they're 2 totally different processes. All right, so we have our activity-based management. It's used in conjunction with the activity-based cost to identify areas that would benefit from process improvements by focusing on activities to eliminate waste, decrease processing time, and reduce defects. And the activity-based costs activity rates can also provide valuable clues concerning where there is waste and the opportunity for improvement. And then we have benchmarking that can be used to compare activity cost information with standards of performance achieved by other organizations. So you can, you know, compare obviously with another organization doing something similar. All right, most companies don't use the activity-based costing for external reporting. And this is some of the reasons. External reports are less detailed than internal reports. So remember, when we're looking, you know, internally, we want to get a lot of information in order to make management decisions. Those external reports that we're putting out there, we're not giving as much information. The people that are the user of those reports don't need all of that information if they don't work for the organization. And then it might be difficult to make changes to the company's accounting system. It's very expensive to make changes in your software. Software can be very expensive. It can, you know, require a lot of downtime. So sometimes it's hard for companies to make decisions to make changes like that because of the downtime and because of the cost of it. A lot of times you got to run two systems at once. So that could be a reason. And then activity-based costs does not conform to GAAP. So if you're trying to produce financial statements that conform to GAAP, maybe that's a guideline that's in, let's say you have loans with banks, that might be one of the guidelines that you have to keep your books according to GAAP. So then you can't use activity-based costing. And then you have auditors that they may suspect that the allocation that you come up with is subjective. So you know, they may think that, you know, okay, they've come up with these activities and you're coming up with these, you know, ways to cost things out, but it's really just subjective. So that might not be the way that they want to see how it's costed at. They may have different ideas. So that might not be good either. And then we have 5 limitations. So we have substantial resources required to implement and maintain. So walking through this, you can see, like, if you're, you know, doing cross-functional teams and you're having them meet, discussing all of these different types of activities that go into these products to come up with these activity cost pools and then the measures, that can take a long time to come up with. And, you know, that's taking people away from other work duties or activities that they have within the organization. So that's one reason. And then resistance to unfamiliar numbers and reports. People typically don't like change. They're resistant to something that they're unfamiliar with, and maybe they're not comfortable, and so they don't know how to do the numbers, and so they just kind of shy away from it. So a lot of times when we aren't comfortable with something and we don't know how to do it, we push it away. And then we have the desire to fully allocate all costs to products. And so, you know, they're going to go through this process to try to figure out how to allocate all of those costs somehow to the product. And that could be also time consuming. Then we have potential misinterpretation of unfamiliar numbers. Maybe we're coming up with a cost pool that doesn't even make sense. So maybe we're bringing in numbers for a particular cost pool and they don't exactly go together. So that could be a problem. We might be overcosting on a particular type of activity. And it doesn't conform to GAAP, which is a big one, especially if you have to conform to GAAP in order to produce your financial statements for external investors or bankers. You can't use the system because it doesn't conform. So then if that's the case, then you have to do 2 costing systems. So you have to use one of those traditional costing systems as well as doing the activity-based cost. So anyway, that was a lot to go through. Do y'all feel like you understand what the process is? I know that it's a lot as far as like trying to wrap your mind around how to do a problem, but do you understand, or do you have any questions about the activity cost system? All right, so it's quiet. I guess y'all good. All right, so I want to look at one of the homeworks just to kind of give you an example. I want you to see the I might change my screen because it looks kind of small on here. All right, so I wanted to look at this one. Let me see if I can make it a little bigger. Okay, so we have this Klumper Corporation. It's a diversified manufacturer of industrial goods. The company's activity-based costing system contains the following 6 activity cost pools and activity rates. So you don't have to calculate out the activity rates on this like we did through the slide. In this particular problem, it's already given to you. They're telling you what the cost pool is, and then what is the rate for that cost pool, and what is that rate based on? So supporting direct labor, we have $6 per direct labor hour. Then it says the activity data have been supplied for the following 2 products. So we have 2 products. One is K425 and one is M67. And this is what is expected. So we have the number of units produced per year, direct labor hours, machine hours, production orders, shipments, and then product sustaining. And it says how much total overhead costs would be assigned to each one of these products using the activity-based costing system. All right, so now we got to figure that out. So you have this, this is the only information you have, and you need to know, okay, well, how do I come up with those numbers? So when we look for supporting direct labor, so the supporting direct labor tells me it's $6 per direct labor hour. Well, for K425, how many direct labor hours did I have? I had 80. So this calculation is going to be the $6 times the direct labor of 80. For the M67, my labor hours are 500, and I'm going to use 6. Okay, so 500 times 6 gives me my 3,000. So I'm just going to go through and figure each one of those out and multiply. So again, the math isn't hard. It's just knowing where to pull the numbers from. Then we have machine processing. So it says it's $4 per machine hour. So I'm going to look for my machine hour. It's 100. So then I would just say 4 times 100. That's 400. And then I have my machine hours for the M67 of 1,500. And I have machine process $4 per machine hour. So I should have 6,000. Then I have my machine setups. So it's $50 per setup. Each, the first one, K425, has 1 setup, so it's $50. And then I have 4 setups for the M67. So 4 times 50, that's 200. My product orders, it tells me it's $90 per order. For K425, I have 1 order, so it's $90. And then I have 4 orders for the M67. So I'm going to take the 4 times the $90 to get the 360. Then I have my shipment. So I have 1 shipment for a K425, and the shipments are $14 per shipment. So it's only $14 for the 1. And then I take 14 and multiply it by 10, come up with $140. And then I have product sustaining, $840 per product, and they each have 1 product. So I'm putting that in, and then I total them up. Okay, so that's how we walk through that one. And I think that on the practice, if you submit it, you should get this feedback. If you get hung up on how to calculate it out, it should give you all of the information. Okay, so it's not really that complicated if you know where to pull the numbers from. Just don't try to overcomplicate it and get yourself confused. This should be pretty much the same thing. So it's asking for the cost on those. So you're just basically doing the same question again, just so you know how to complete it. All right, so this one goes a little further. You're going to have to figure out the customer margin. So it gives you, let's see. Okay, they're making paraglotters for sale through the specialty sporting goods stores. The company has a standard paraglotter model, but it also makes custom design paraglotters. So management has designed an activity-based costing system with the following activity cost pools and activity rates. So here's the information they're giving you. So we have our activity cost pool, we have our activity rate, and then we have our standard model and our custom design. And then it breaks down right here. It says management would like to, an analysis of profitability of a particular customer, Big Sky Outfitters. So this is like an example of what we did through the slides in the lecture, was breaking it down for that one customer. So they've ordered the following over the last 12 months. And so here's all the information that you need for this one particular customer. And it says the company's direct labor rate is $20 per hour. So using the activity-based costing system, compute the customer margin for Big Sky. All right, so you have to do all of the calculations in order to come up with this. You got to figure out all of the costs based on that activity cost pool. You're basically going to do the same thing that we just did, where you have to calculate out all the information. So if we look down here, it tells us what our sales are. So in this little chart here, it gives you that selling price. So the selling price per glider is $1,700 on the standard model. And it tells you that they ordered 15 of those. So we have the 1,700 times the 15. Plus, they also bought some custom. They have 3 gliders that they bought. And those selling prices is $2,330. So we've got the selling price times 3. And there it is, $2,330 times 3. So that gives me my total sale. Then I got to go through and come up with my costs. So I have my direct materials. $476 is my direct material cost per glider. So we're basically doing the same thing. We're going to take the 476 times the number. So we have 15. And on this one, it's 584 times the 3. And then we're going to add those together to come up with the cost. So 476 times 15 plus the 584 times 3. That gives me $88.92 for my direct materials. Then I have to calculate direct labor. Well, it tells me in my example, my problem, that it's $20 per hour. And I need to know what do I multiply that to. So it's got on here that we do the $20 for direct hours times 30.5 direct labor hours per standard. So when we go up here, the information given to us says direct labor hours per glider, 30.50. Okay, so we're taking the 30.50 times the 20, and then we're going to have to take the 32 times the 20, and we have to add those together. That gives me my 11,070. Okay. And then it says we have the supporting direct labor hours. So the direct labor hour for the supporting, we're coming up with 20 per direct labor hour. So we take that rate of 20, and then how many hours do we have? It's at 30.5 again. So 20 times the 30.5. And then for the direct labor is 20, and we have 32 on the other product. So we have 32 times 3 gliders. So we have 11,070 for the cost of supporting labor. Then we have our order processing. So right here, order processing is 200 per order. So we have to figure out how many orders did they have. So it tells us they had 2 orders here and 3 orders here. So it's a total of 5 orders. So it would be 5 orders times the 200 per order to come up with $1,000. The next activity is the custom designing processing. So we had $271 per custom design. And then if we look at the custom designs, we didn't have any for standard. We had 3 for custom. So we're going to take 3 times the custom, 271. So 271 times 3, come up with 813. Then the last one was customer service, 434 per customer. And this is 1 customer, so it's 434. We have to add all of those together to come up with the total cost. So if you look at their margin, they're at a loss of $789. So they're not making any money on this customer. They're actually losing money. So that's how you would calculate it out, and then you would put your information in here. So remember, it's direct materials direct labor, and then you have to go through each one of these activity cost pools. Supporting direct labor is $20, and you multiply that by the direct labor hours here, okay? And you just keep going through that process like we just did. So you want to do direct materials, direct labor, and then your activities to come up with that one. Do y'all have any questions? Okay, so far so good. So this is an example of a problem that's similar to that, remember the distribution chart that we looked at where we had the percentages. So they're giving us that chart and we have to calculate that out. You know, based on these right here, teller wages, activity branch manager, the branch manager salary, and we have to break those out. So when we're opening accounts, we're going to take that 160 cost of a teller wage and how much is getting allocated to opening the account. Well, it's 5%. So that's where the 8,000 comes from that you fill in on your chart. So you're basically just looking at these percentages of the way that it was set up on the distribution chart. And you have to multiply it by each one of these costs that are associated with, you know, the activity. So the teller wages here gets broken out by these percentages, and then you fill them in here. It's broken out on your chart the same way it's laid out here. So you just go through and multiply. Okay, so you're basically doing the same thing. You have to calculate it out, and then you have to figure out what it is per account. So then you would have to divide it by that account. So when we come up with the cost, when you do your little chart, you will have to calculate this yourself based on what's given up here with this distribution chart. Once you fill it out, similar to what you just did in the previous problem, then you'll have to take those total costs and divide it by whatever that activity is to come up with the amount per activity rate. So again, this is something that we did in the slides. We you know, took those costs and divided it by the activity that was given to us. So when you calculate everything out for opening accounts, it came to 16,450. And then you have to look to see how many open accounts were there. It was 185. So I'm taking the total cost and dividing it by 185 to come up with the amount. So the opening accounts are 88.92 per account. So this one is a little bit more work. You got to do the chart first to come up with the cost. Then you got to add each one, and then you got to go back and divide by the total activity in order to come up with a per activity amount. Okay, so this one wants you to calculate using the traditional costing system, and then the activity-based costing system, and then the comparison. So you just got to calculate it all out, basically what we just did, and then you're going to do the comparison so you can see how to do that. So again, this one's going to take a little bit of time, but if you need to go to the practice and submit in order to get to these explanations, you should have these on your homework on the practice so that you can see all of this to help out if you're struggling getting the numbers. Okay, so if you don't have that information and you need it, just email me, let me know. Do y'all have any questions? Okay, so if there's no questions, that's it. Remember, no class next week. We'll have 2 chapters the following week, which is, I think the 17th. So no class on the 10th, 2 chapters on the 17th.